Welcome to the Deep Dive, where we unpack the crucial insights from key sources to help you cut through the noise. Today, we're taking a deep dive into the latest earnings call from Applied Materials, ticker AMAT. This is for their fiscal third quarter of 2025.
Yeah, and it was a quarter that presented a really fascinating paradox, wasn't it? I mean, on one hand, you had incredible underlying strength, record-setting performance even, but on the other, the forward outlook just sent these immediate shockwaves through the market, prompted a big sell-off. So we're going to try and pull apart that apparent contradiction today and, explore what it really means.
Absolutely. Let's jump straight into the numbers. Q3 2025, Applied Materials delivered total net revenue of $7.30 billion. That's an impressive 8% jump year over year, and it comfortably beat analyst estimates, which were hanging around $7.22 billion. So strong top line beat right out of the gate.
Definitely. And the strength wasn't just on the revenue side. If you look at profitability and non-GAAP EPS, that's earnings per share, adjusted, for a clearer picture of core operations, it was a record $2.48. That's a really powerful 17% jump year over year, also beating the consensus estimate, which was $2.36.
Yeah.
And we also saw, healthy non-GAAP gross margins, 48.9%, up about 1.5 points year over year, and non-GAAP operating margins too, very respectable, 30.7%. So, by almost every measure, Q3 looked stellar for AMAT.
You're right. On paper, it looks fantastic. A truly great quarter. So what gives? What exactly are investors seeing that caused such a swift and dramatic disconnect between that strong past performance and this, frankly, pretty bleak market reaction? Despite these record Q3 results, the market's immediate reaction was, a sharp sell-off. The stock plummeted, 11-13% in after-hours trading. That's nearly a $24 drop from about $188 down to maybe $164, $165. What's going on there?
Well, that sharp sell-off, despite those record results, it really highlights a fundamental market dynamic, especially for growth stocks like AMAT. Future guidance often outweighs past performance. It's just, a testament to how forward-looking markets are. Even stellar rearview mirror results get instantly discounted if the road ahead looks, bumpy. What truly spooked the market here was the company's Q4 2025 guidance. While Q3 was strong, management's tone for Q4 was notably cautious, signaled a potential speed bump.
Right. I remember their CEO, Gary Dickerson. He framed Q3 as record performance, but then immediately highlighted an expectation for revenue and earnings to be sequentially lower in our fourth quarter, primarily due to uncertainties in our China business.
Exactly. And then the CFO, Bryce Hill, he elaborated on that, pinpointed two key headwinds impacting their near-term visibility: digestion of capacity in China, and also nonlinear demand from leading-edge customers.
And the numbers really reflected that caution, didn't they?
Yeah. Oh, absolutely. For Q4, Applied Materials guided revenue down to $6.7 billion, plus or minus $500 million. The midpoint of that range, $6.7 billion, is significantly below what analysts were expecting, which was around $7.33 billion. That's a big miss. And non-GAAP EPS is projected to be $2.11, plus or minus $1.20. That also fell well short of the consensus, which was $2.39. So this notable miss on guidance was the primary catalyst for the market's visceral reaction.
Okay, so let's unpack these headwinds then.
Yeah.
Starting with China, that seems to be the elephant in the room. What exactly does digestion of capacity mean in this context?
Right. Think of it like this. In 2023 and early 2024, Applied Materials shipped a lot of equipment into China. Customers there were on a massive spending spree, investing heavily in new fabrication plants and expanding old ones. So digestion of capacity just means those customers have now built out a significant amount of new production capability. And they're integrating it. They're moderating their spending after those big investments, basically taking a breather to catch up. We see these cycles sometimes in the semiconductor industry, right?
Yeah.
Periods of heavy investment followed by these plateaus as new capacity comes online.
And China's revenue contribution was huge in Q3, right?
It was significant, 35% of revenue in Q3. But it's expected to drop to approximately 29% in Q4. And maybe more importantly, management anticipates this lower level is going to persist for several more quarters.
Oof. Several more quarters.
Yeah. And what's particularly interesting here is the company mentioned they have a large backlog of pending export license applications.
Yeah.
These are, a direct result of ongoing geopolitical tensions and export controls. But for their Q4 guidance, they've taken a really conservative stance. They're assuming none of these licenses will be issued.
Wow. Okay. So they're not banking on any approvals.
Nope. Which means, any surprise approvals could offer some upside, but they're definitely not counting on it in the forecast.
So even with China's stated goal of semiconductor self-sufficiency and all the new fabs being built, the near-term business rate for AMAT there is expected to be lower than 2024 levels, and no immediate upside projected, even if those licenses magically appear sooner. That's a very clear signal of caution, almost a wait and see.
Precisely. And this also connects to that second headwind they mentioned, the nonlinear demand from leading-edge customers. Now, while the underlying long-term demand for, leading-edge logic and DRAM, that remains incredibly robust. It's driven by this insatiable appetite for AI high-performance computing.
Right.
But the timing is the issue. Customers are apparently just taking longer to commit to orders, and this creates a shorter visibility window for Applied Materials. Makes forecasting harder.
And this nonlinearity, they linked it primarily to market concentration, meaning fewer, very large customers driving the bulk of demand, and also the unpredictable timing of new fab construction and equipment buys. Like, for instance, that gate-all-around related purchases. They're now expected to be just over $4.5 billion for fiscal 25, which is like 80% growth instead of the 100% they previously thought.
Exactly. That 20% difference accounts for some of that Q4 softness. And that delay, or rather slight scale back in gate-all-around, or GAA, that's significant. For listeners maybe not deep into chip architecture, GAA transistors are a completely new way of designing the fundamental switches on a chip, moving beyond the older FinFETs.
It's a huge shift.
It is. And Applied Materials expertise in materials engineering becomes absolutely critical here. When you combine GAA with other innovations like backside power delivering power from the back of the chip, it fundamentally shifts the value chain. These are complex, multi-step processes where AMAT's deep knowledge of material science and precision engineering is essential. They enable new architectures that, frankly, traditional methods can't easily achieve.
Okay, so while the near-term picture has its clouds, management didn't shy away from painting a very bullish long-term vision. They emphasized that leadership in AI remains a major focus for both companies and countries, driving substantial investments. So this brings us to a crucial pivot point. How much of that confidence is, genuine strategic positioning versus maybe just necessary optimism on an earnings call? Are there counterpoints or risks to that long-term story we should be thinking about?
That's an excellent question. And yeah, this is where the real deep dive begins, I think. Management's confidence seems rooted in several key technological inflections that play directly into Applied Materials' strength. They're not just wishful thinking. They see innovation concentrated in about 5 key areas for AI semiconductors. Things like leading-edge logic, next-gen high-performance DRAM, including high-bandwidth memory or HBM stacking,
right.
Advanced packaging to connect all those logic and memory chips together efficiently, and also innovations in power electronics specifically for data centers.
That's quite a list. But why are these particularly significant for Applied Materials specifically?
Well, what's truly fascinating here is how these major device architecture inflections, as they call them, are shifting value towards materials science and materials engineering. This basically expands their total addressable market, creates opportunities for market share gains. It plays right into their core competency. So, for example, that transition to gate-all-around transistors with backside power delivery we just talked about, that alone is expected to increase their revenue opportunity by about 30% for the same amount of fab capacity built.
30%? Wow.
Yeah. They're not just selling tools anymore. They're enabling the very foundation of these next-gen chips. And they seem pretty confident they're on track to gain multiple points of market share when these technologies really ramp in 2026 and 2027. So it feels like more than just hope. It's strategic alignment with where the whole industry is undeniably heading.
That is powerful positioning. And you mentioned DRAM. They expect revenue from leading-edge customers there to be up around 50% in fiscal 25. It could be a record or near-record year for them in DRAM.
Correct.
And their advanced packaging business also on track to more than double, to over $3 billion annually in the next few years. And just for our listeners, HBM stacking, for instance, that's critical.
Exactly right. And beyond the big equipment sales, another really consistent strength for AMAT is their service business. It's grown for 24 consecutive quarters year over year. 24.
That's incredible consistency.
It is. And over 2/3 of that service revenue now comes from subscriptions, and that figure is expected to keep increasing. This provides a really stable, predictable, recurring revenue stream. It's a crucial element for long-term stability that, frankly, often gets overlooked when the market just fixates on the quarterly equipment sales cycle.
Right. It's like the sauce model, but for chip factories.
Kind of, yeah, in a way.
And looking even further ahead, they're making strategic investments, too. Over $200 million in Arizona, part of more than $400 million invested in U.S. manufacturing infrastructure over the last 5 years. And their new big R&D facility, the Epic Center in Silicon Valley, is on track to start operations in spring 2026. This whole co-innovation strategy with customers seems designed to accelerate next-gen tech development, give them an early lead. It feels very proactive.
It does. And overall, despite that Q4 outlook causing jitters, Applied Materials remains on track for mid-single-digit growth for the full fiscal year 2025. That would mark their 6th consecutive year of revenue growth. And management also signaled they'll be cautious on operating expenses given the lower revenue guidance, which is, the sensible thing to do in an uncertain patch.
Okay, so we've dissected the quarter, the outlook from AMAT's perspective. Let's pivot now to what this truly signifies for you as an investor, and maybe the broader market landscape too. That sharp stock price decline clearly reflects the market's laser focus on near-term guidance, often overlooking strong quarterly performance or, frankly, these long-term narratives we've just discussed.
Indeed, and it's not just AMAT. The broader semiconductor equipment sector is grappling with similar issues, right? Softer demand from China because of that digestion phase we talked about, and the ongoing tightness of export controls, that affects everyone. We've seen peers in the space, like Lam Research, KLA, also signaling potential stagnation or maybe slower growth in certain segments looking out to 2026. So this adds to the cautious market sentiment we're seeing. It creates a kind of sector-wide overhang. It's not just an AMAT-specific issue. It's more systemic right now.
However, the underlying long-term demand drivers for the semi industry, particularly tied to AI and high-performance computing, they still seem incredibly robust, don't they? I mean, people are talking about a multi-year supercycle here.
Absolutely.
And Applied Materials' strategic focus on these critical inflections, GAA, backside power, advanced packaging, it does seem to position them exceptionally well for future growth, regardless of any short-term choppiness. It feels like a classic case of the market maybe giving you indigestion before it offers dessert. Did that make sense?
Yeah. It truly does seem that way sometimes. And this raises the really important question for everyone following this space. Is this Q4 softness just a temporary digestion phase, a mere blip on a much longer growth trajectory? Or is it maybe indicative of a more prolonged slowdown in specific segments or geographies? The company itself noted increased uncertainty, lower visibility beyond Q4 because customer commitments are coming in later, makes it harder to predict that linearity of demand.
Right.
So the coming quarters are going to be crucial in determining that answer. This is often where the patient investor, the one looking beyond the immediate headlines, can potentially shine.
All right, let's shift gears slightly. Time for some out-of-the-box thinking. Given AMAT's sharp sell-off on that guidance, but with management being so steadfast on those long-term AI-driven inflection points, here's a thought for the truly contrarian, maybe for those who see this volatility as an opportunity.
Okay, let's hear it.
Well, purely hypothetically.
Of course.
You could consider something like a deeply out-of-the-money call option spread, maybe looking out to early 2026.
Okay, so explain that. You mean buying a call option with a strike price significantly above the current stock price, say $220 or $230 when it's currently around $165 after the drop.
Exactly. And then simultaneously selling an even higher strike price call option, perhaps $240 or $250 for the same expiry date.
Right. So buying the lower strike call, selling the higher strike call, that creates a spread, limiting your potential profit, but also significantly reducing the upfront cost compared to just buying the call outright. Defines your risk.
Precisely. The play here would be to capitalize on a potential rebound, maybe a significant one. Once that digestion in China normalizes, and as the timing for leading-edge fabs, especially around GAA and HBM, becomes more predictable, it assumes the market eventually re-rates AMAT based on its strong, almost irreplaceable positioning in these critical AI-enabling materials technologies. Yeah. Rather than getting bogged down in, short-term linearity worries.
So it's essentially a bet on patience, a bet that the market shifts from this show-me-now mentality back to a more trust-the-roadmap approach, given AMAT's tech leadership. Naturally, this is a high-risk, potentially high-reward play. It's certainly not for everyone. You're betting on a pretty significant upward move and getting the timing right within that early 2026 window. Lots has to go right.
Absolutely.
So remember, this is purely for discussion, right? A thought experiment to illustrate how one might approach a volatile stock with a long-term bullish view. This is absolutely not financial advice. Please do your own research.
Definitely not financial advice. Okay, so to recap our deep dive today, Applied Materials delivered a stellar Q3, beat estimates, But its conservative Q4 outlook really rattled investors, driven mainly by that China capacity digestion and the sort of nonlinear demand timing from leading-edge customers.
Right. But despite this near-term uncertainty, the company remains highly confident in its long-term growth trajectory, fueled by these critical AI-driven semiconductor inflections where it seems to hold a strong and, importantly, growing market share, really underpinned by its unique material science expertise.
So the coming quarters will undoubtedly be crucial. They'll start to reveal whether this Q4 softness for AMAT is just a temporary digestion phase, or if it perhaps signals a more fundamental, maybe more prolonged shift in the demand landscape for the whole semiconductor equipment sector.
What remains clear, though, I think, is that while headlines often focus on the immediate noise, true long-term value often lies in understanding these deeper underlying technological shifts and market inflections. So the question for you, the informed listener, then becomes, are you looking mostly at today's price reaction, or are you trying to gauge tomorrow's possibilities based on that tech roadmap?
A great question to end on. Thank you for joining us for this deep dive into applied materials. We appreciate you tuning in and encourage you to continue exploring the fascinating world of technology and markets.